Oh, let me mute that.
Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is December 7th, and we're now joined by Edward Meir of Commodity Research Group. Ed's been joining us regularly to talk about macro, metals, and really tell us a lot about what's going on in the global markets. Help us figure things out. How's it going today, Ed?
Fine, Michael. How are you?
Good, good. We've got a lot to talk about. We can't say it's a dull market. Everything is all over the place. Tell me, what have you been focusing on? What catches your eye right now?
Well, like you said, it's a lot been going on. It seems you get no time off for anything, including the weekends. So, last weekend we had that big news with the Trump Xi meeting, and it seemed very much like a sell into the rally type of a meeting. Things opened up higher on Monday, and we just sold off dramatically after that because there just wasn't much meat to the discussions. As you know, the U.S. was saying one thing, the Chinese were saying something else, and then both sides sort of got back on track. And then we had this arrest on Wednesday of the Chinese CFO at Huawei, or however you pronounce it,
Huawei.
Huawei, and things have been unsettled ever since. I think this arrest is a bit of a is not a bit. It's a big deal. Somebody was saying, one of these China watchers who are, they've been in, the guy's been in China for years. He said this arrest was like the equivalent of Steve Jobs' daughter being arrested in China. That's how much the company is well known and well respected in China. So this is a big deal. And to sort of add insult to injury, she was arrested on the day that the two presidents met in Buenos Aires. And the Chinese just do not believe that President Trump did not know about it, although his national security advisor did. So long and short of it is that I think this thing is going to still have another leg to it. I'm kind of waiting for some sort of a Chinese response or a minor kind of a retaliation somehow. Maybe they'll suspend the trade talks for a couple of weeks. Who knows? That's possible. So I don't think the turbulence is over, and by that I mean rallies are still very vulnerable. And we're seeing that today in the equities again. They staged a comeback yesterday, but they seem to be coming off again. In the commodity market, same thing. Metals were down big yesterday, a bit of a bounce today on account of a weaker dollar. But I wouldn't want to buy any of them right now. In fact, I'll be looking to sell some of them. Zinc, if people trade zinc, I doubt they do, but zinc looks quite rich to me here at around $2,600 on the LME. It's a steel play in a way, so I'm not that bullish on steel prices going into next year. So zinc might be a good short. The others are kind of, in the middle of their range, but I think they'll gradually grind lower. Um, in the precious group, gold is finally moving. Finally,
Yeah, it
after
is.
all this, we're at 1250 now. Um, I think it should be doing a lot better than it has. So now that it's taken out this 1240 resistance, maybe we can start picking up some steam. But nobody is really piling into it because there just hasn't been much upside. Gold should be up 20, $30 a day, and
Well,
it's just
take me
up
through that.
five, up
You just
seven.
made it. Yeah, you just made a reference. You think that it should be higher. Why exactly? Is it technical? Is it fundamental? Is it supply demand? Is it seasonality? Why do you like it higher here?
Well, I like it higher because you have a couple of things driving it. The dollar is finally weakening. The dollar index is at a multi-month low, so that should be bullish for gold. Equities are coming down. Before, when equity markets would drop, gold wouldn't do anything because it would be a one-off type of a sell-off. Now we're dropping days and days and weeks in a row, punctuated by some rallies here and there, but nevertheless, equities are dropping, the dollar is dropping, and interest rates are dropping. So, if gold can't get going on these things, what's it going to move on?
Yeah, absolutely. You also referenced other metals, zinc. Anything else in the metal space? I agree. Gold has been acting well, but like you said, it's not ripping higher. Um,
Yeah, I think other metals. Palladium has really been hitting new highs, which is really puzzling. Yesterday we had a big sell-off in palladium, but it's kind of recouped about half the losses already. Palladium is used in catalytic converters. It's mainly in the Chinese and U.S. auto markets. It's a metal that's in deficit, um, very tight in terms of physical availabilities, but yet it's at all-time highs and trading at about $400 over its over platinum, kind of its sister metal. So I wouldn't want to short it, but I think it's something to watch on the short side when it finally breaks and you get the charts looking more negative. Right now, the charts are still trending up, but I think on a break, maybe down to around 1140 or so, or 1125 is when the trend line will break. You could see a bit more downside in palladium. Um, Everything else in the precious group, platinum keeps falling. I wouldn't want to buy it here, although it's getting quite cheap. It's at about a 2 month low right now at 795. But for the time being, I think gold and silver are pretty good long side bets if you're playing the precious metal. But granted, you want to see a bit more than what we're seeing. That's the main thing.
what about as we look into Q1? There aren't many days left in 2018. As we look into Q1, what are your thoughts? Is there something that sticks out at you or what's the trade? Is there something you're looking at?
Not really. Q1, what's going to happen? Q1, look, the trade talks will either break down or continue. I think they'll probably continue. There'll be more talks, more issues that need to be hashed out. None of this is going to be sorted out in 90 days because the issues are so stark, they're so difficult. They go beyond just buying and selling more computers or cars or whatever it is. We're after structural changes in the Chinese economy, and they're going to be very resistant. So I think both leaders will probably feel enormous pressure to keep talking, and I think for a change. President Trump will feel it more because he has the U.S. markets now on the ropes. Before he didn't. All throughout the summer, the Dow kept rallying. They ignored all the trade stuff. Everybody was saying this is insignificant. It's like 0.2% of GDP or whatever it is. Everybody was poo-pooing it. I was not one of those. I thought this was a serious issue, and I thought it would manifest itself in a weaker equity markets eventually, and we finally got that break in October and November.
What about, I agree with what you said a little while ago that this Huawei arrest is significant. That, actually just today, U.S. administration Navarro and Kudlow have been on the TV saying, yeah, it's completely separate from the trade deal. I can't really see that. And I'm wondering, who's negotiating from strength between U.S. and China when they're going back and forth at this point?
If you read the U.S. press, it seems we're in the driver's seat. I'm not too sure about that because I'm not looking just at the trade numbers. The Chinese have a lot of cards to play as well. They hold a lot of our debt. All our U.S. companies are there manufacturing. So, doing anything to them or towards them would hurt our interest. I think I mentioned to you last time, what happens if they tell Apple, you have 6 months to pack up? The Dow could fall 5,000 points and Apple will be out. You just can't make 500,000 iPhones anywhere else. You're certainly not going to make it in Wisconsin, where Foxconn is coming. Nobody can handle the manufacturing supply chain like the Chinese can, and it's going to take a lot of time to move it out. In fact, there was a poll last month. They surveyed about 67 American companies operating in China, and they asked them, where are you going to relocate to? Most of them said they will relocate outside of China along the Asian rim. 1% of the respondents said they would come back to the United States. So this reshoring thing is a myth. It's not going to happen.
Do you think that companies like Apple and other that are heavily reliant on China are more nervous than they're actually portraying?
I think they are, and I think so far the Chinese aren't really doing anything, because in a way it kind of will hurt them if they move towards these American companies. But if you push them into a corner, they're going to respond. They have to pull out some of their own cards. So that's why I think there's no winner in this thing. It's a mutually assured destruction, to borrow the '80s term. It's really playing with fire. So I'm very happy that the two sides are talking now. This arrest is kind of throwing things a bit into, it's kind of given us a bit of a detour we don't really need. But I'm glad they're talking, and I'm hoping as they make some progress, some of this uncertainty will lift.
Yeah, it'll be interesting to see over the weekend if there's any sort of retaliation or any sort of comments directly from China on this, because it does seem like there was good back and forth, especially after G20. I was skeptical as well as you about that they could get something done in 90 days. So we'll see what happens with that. Tell me about, I know you put together a really detailed monthly letter every month where you cover all the commodities. What did you write about in December? What was the key
Well,
themes?
our December is coming out tomorrow. Having said that, we did a 35-page report on metals, on the metals outlook for next year. That came out last weekend. I did not send it to you because it sort of goes into the weeds on each of the metals. But I will send it to you. You may want to just put the summary on the website, just so that your readers will know what's going on. But that kind of threw me back a bit. So the usual monthly report will be out tomorrow. But kind of it'll just talk about kind of what we've been talking about, you and I, just now. A few things will happen in December. We have this December 11th vote in the UK. Sterling is just sitting at 127. It's just not doing anything. It'll be interesting to see if she has the votes to get it through. I think they probably will get it through, because the ramifications of a rejection, I think, are just, you just don't know what will happen.
Well, let's
So,
dive more into that, into Brexit.
yeah.
Where do you think, what do you think the outcome's going to be, and what are the ramifications for the pound? Here we are, like you said, we've been hovering between 127 and 128.50 for a number of
Weeks.
days now. Yeah.
Yeah. Last time we talked, I was bullish on sterling going into the vote. I think that was early in November, and the currency rallied all the way to 132. But then it's been coming off because you've been getting setback after setback with resignations and backbiting and legal challenges, and now, of course, no one knows if she has the votes or not. I think the fact that she's going ahead with the vote tells me that it'll probably go through. So I wouldn't want to short. I probably wouldn't want to have a position, period. But if you put a gun to my head, I'd rather be long sterling here than short going into the vote.
So, do you think that the next 10 big figures in pound is higher?
I would say so. I think if you get a yes vote, I think you could get up to 131, 132. If you get a rejection, I think we can drop to maybe 122, because most of the decline is already behind us, given that we've dropped from 170 2 years ago to 125. I doubt it's going to get to like a buck or anything like that. Maybe 120 would be the maximum. But I think the risk reward kind of favors the upside at this stage. So check with me on December 12th.
December 12th is not too far away.
No.
But in general, once it's kind of out of the way, do you think that this? I mean, Brexit has been going on forever. The
Yeah.
negotiations to nowhere. Once it's we get a little bit more clarity on it. Do you think that the pound then has some headway to really start to trade higher? I actually saw Deutsche Bank had fair value and was expecting close next year to be closer to the 145, 150 level.
Wow.
Um, but I've
I,
seen some different expect. That's also though going along with they are also calling for a weaker dollar across the board for next year.
right.
So that
Right.
was part of it as well.
Yeah, it's possible. I mean, as you know, it's a cliche by now, but markets hate uncertainty, and when you don't have a deal, people are just going to sit on their hands. I have lots of friends and associates in London. The real estate market is dead, just dead. No one is trading. There's no bids. There's nothing going on. Even outside of London, it's the same thing, and so it's kind of and you amplify that across the economy. People are just not going to invest money or capital or investment capital into anything till they know what the duties are, what the relationship is, whether they can live there, whether they need visas, whether the borders will work, all this sort of stuff.
Interesting. Any other topics you're looking at? I know we spoke yesterday with Andy LeBeau on oil, and today we're having an explosive move higher after the
Yeah.
OPEC deal. We're up about 4.5%. Nat gas has been all over the place. We're about 450 right now. Any other commodities that are catching your eye? Any trades into the end of the year or beginning of January? Thoughts?
Yeah, thoughts. Well, oil. You could talk to Andy about it. We've had a big move up. I think again, it's a bit of a relief rally that at least we got a cut in. I still like natural gas. I was bullish on natural gas last time we spoke. Um, at around 450, I think we haven't gotten into the deep winter season yet. Inventories are still very tight, so it's something to watch. Maybe buy it on a decline to the fours or 4.25 range, something like that. I think you'll have one more bounce in that. Um, the Otherwise, it'll be interesting to see what happens. Also, we haven't talked about the elephant in the room, which is the Federal Reserve meeting on the 19th. Yesterday, the Wall Street Journal came out saying that they want to look at some wording in their communique about maybe going into a wait and see mode after this next rate
Right.
hike. So we'll see if that happens or not. But certainly, if that happens, the dollar will continue to weaken. That should be good, particularly for the precious metals. They're not really caught up in this trade hoopla. So, you could get a bit more bang for the buck in gold and silver, especially now that they seem to be breaking out.
Yeah, absolutely. One thing that we've never really spoken on, and we don't, I'm just looking at my charts, and one thing that continues to pop up over here, and I don't know any thoughts. We've never spoken about Bitcoin here. We're trading the future's trading 3170. It's just in free fall here,
Yeah. Yeah.
and that really that whole asset class is on its heels.
Sure, but 3170. I mean, when you look when it's risen from, I don't know, $400 or $300, I have somebody who looked at it at five.
Right.
So
Well, but the other, the Bitcoin's, right, you can argue that, but the other ones, the other crypto coins are just
yeah,
demolished, done.
they really are. Yeah, yeah. It's a pity because the idea kind of made sense. It was like an alternative currency. Um, outside of the dollar system or the regulated system, and it was like a what do you call it? A libertarian type of instrument of trade, and it had some merit, but because of the regulators and their fear of how it could be misused, people just sort of targeted it and just suffocated it, and I think that's the problem. Um, so
All right. Well, Ed Meir, Commodity Research Group, I really appreciate you taking the time. A lot of great information. We'll talk to you soon.
Thanks, Michael. And I'll send
Thanks.
you our notes as they're ready.
Great.
Thanks.